Good day, everyone. We are continuing with our accounting grade 12. Today's lesson is based on the accounting paper which was written in November 2020. So we are still doing accounting grade 12, November 2022. But today our main focus is on paper 2. Today we are doing paper 2. So may I request that you all take out accounting grade 12 November 2020 in bracket 2. And we will be starting from question 1. We will be starting from question 1. Question 1 is 25 marks and it is based on VAT and Creditors Reconciliation. VAT and Creditors Reconciliation. That's 1.1. 1.1 is based on VAT, and then 1.2 is Creditors Reconciliation. VAT, it is value added tax. It is VAT that is charged, it is tax that is charged on the supply of goods and services. But I want to also emphasize to you, students, that VAT is not charged in all goods. There are some goods which are exempted from VAT, which are VAT exempted items. Some are zero rated and others are standard rated. So those that are standard rated, VAT is charged at 15%. And not all businesses charges VAT. Only the VAT vendors are allowed to charge VAT. So this question is based on VAT, and we know that if the price, for the price excluding VAT, price excluding VAT is equal to 100%. Price excluding VAT is 100%, and then VAT in South Africa is currently charged at 15%. So VAT is 15%. And therefore price including VAT, will be equal to 115. So price excluding VAT is 100%, VAT is 15, and price excluding VAT is 115. So let us look at the question that is here, which is question 1.1. 1.1.1, it says, calculate the figures indicated by A to D in the table below. And there is information given in the question paper here. The table has got the price excluding VAT, the including VAT, and the VAT amount. So the first transaction there, which is A that we need to calculate, we are given the price excluding VAT, and we are also given the price including VAT. And our task is just to calculate VAT. So the price including VAT is 89,700. Price including VAT is 89,700. Right? And the price excluding VAT is 78,000 minus 78,000. Because we want to calculate a VAT amount. So the price excluding VAT is 78,000 and the price including VAT is 89,700. So 89,700 minus 78,000. 89,700 minus 78,000 equals to 11,700. So our VAT amount is 11,700. But there are so many alternatives that you could have used to calculate this VAT amount of 11,700. For example, if we can do the other alternatives here, if you can take the 89,700, which is price including VAT, and then you want to calculate VAT. Remember, VAT is 15, so you multiply by 15 and you divide by the percentage of the amount given. The amount given is 89,700 and it includes VAT. So the percentage of the amount including VAT is 15. So 89,700 multiply by 15 over 115 will give you 11,700. Will give you 11,700. Even when you decide to use the price excluding VAT, if you decide to use the price excluding VAT, the price excluding VAT is 78,000, and you want to calculate the VAT amount. The VAT percentage is 15, so you multiply by 15, and then you divide by the percentage of the amount given. The amount given, 78,000 here in this case, is the price excluding VAT. And the price excluding VAT is 100%. So it will be 15 over 100. So 78,000 multiplied by 15 over 100 will give you again 11,700. So these are other alternatives that you could have used to calculate the 11,700 VAT. But if you take the amount including VAT minus the amount excluding VAT, you are also getting the correct amount of 11,700 for VAT. That is line A. That is where we are required. And line B, we are required again to calculate the VAT amount and the amount given. This is the discount received from suppliers, and the amount that is given there is excluding VAT of 12,400. So there is 12,400 excluding VAT, and we need to use that amount to calculate VAT amount. 12,400 is excluding VAT. If we want to calculate VAT, the percentage of VAT is 15, so you multiply by the percentage of what you want, and then you divide by the percentage of the amount given. The amount given is excluding VAT, and the price excluding VAT, I've already explained it, that it is 100%. So it will be 15 over 100. So if it is 12,400 price excluding VAT and you want to calculate VAT, it will then be 12,400 multiplied by 15 over 100, which equals to, before, if VAT used to be 14%, and I remember at one stage, I think the minister at that time was Malusi Kigaba. He adjusted VAT and he moved it a little bit up from 14% to 15%. So then 12,400 multiplied by 15 over 100. 12,400 multiplied by 15 over 100, then the VAT amount equals to 1,860. The VAT amount equals to 1,860, which is B. We are required to calculate the VAT amount. And then C, we are given the price including VAT, or we are given the VAT amount. For transaction C, we are given the VAT amount, which is 210, and we are required to calculate the price including VAT. Given the VAT amount of 210, we want to calculate the price including VAT. If you look at the table that I've given you here of the percentages, the price excluding VAT is 100, VAT is 15, so 100 plus 15, your price including VAT will be 115. So we want to calculate the price including VAT. You must multiply by the percentage of what you want. We want to calculate the amount including VAT, which is 115, and divide by the percentage of the price given, which the VAT amount is 15%. So you just divide by 15 here. So it will then be 210 multiplied by, we want to calculate the price including VAT, so we need to multiply by 115 multiplied by 115. We are given the VAT amount, so we need to divide by the percentage of the VAT amount, which is 15. So it will be 210 multiplied by 115 over 15, and the correct answer will be 1,610. Price including VAT is 1,610. Right, let us then go and check D. We are also required to calculate D. And what is it that is required with D? We want to calculate the VAT amount, having been given the price including VAT. The price including VAT that we are given is 158,700. We are given the price including VAT of 158,700, and we are told that this includes sales for 9,200, which should have been sold at zero rate. So if there is 9,200 which is zero rated here, wherein that we need to take that 9,200 out, because if it is zero rated, it means VAT is not charged on those items. So this includes the sales of 9,000 which should have been sold at zero rate. So let's take out 9,200. That's 9,200 equals to 158,700 minus 9,200. We are taking out the zero rated items. Because the zero rated items, VAT is charged at 0%. There is no VAT is charged at 0%. So it's 158,700 minus 9,200, which equals to 149,500. 149,500. 158,700 minus 9,200. 158,700 minus 9,200 equals to 149,500. And then we want to calculate VAT. We have taken out the zero rated items. So then this amount is that is given is price including VAT. And we want to calculate VAT amount. VAT percentage is 15, and you divide by the percentage of the amount given, which is 115. Because this amount includes VAT, therefore we need to divide by its percentage, which is 115. So then it will be 149,500, 149,500 multiplied by 15 divided by 115 equals to 19,500. So VAT amount is 19,500. So we are done with VAT calculations. So now we are proceeding to 1.2. Oh, there is 1.1.2. There is a question which is still under VAT there that we need to go through. There is question 1.1.2 which says, the internal auditor discovered that Amahle has been underpaying the amount due to SARS in respect of VAT. At each submission date, on enquiry, Amahle stated that she used the money to pay business expenses and adjusted the payment later. Comment on this practice and give Amahle advice. Right. This practice, what we are getting here is that the internal auditor is using the amount of money collected from customers, which is meant for VAT, and is using this money now to pay for business expenses and then make adjustment at a later stage, which is unethical. So our comment is that the business money should be used to pay for business expenses. VAT collected should be paid to SARS. The business money should be used to pay for business expenses. VAT collected should be paid to SARS immediately. So what we are saying is that it is unethical to use VAT money. You can even add by saying that this practice is unethical. It is unethical. This practice is unethical, and the business may be fined for that. It is unethical for the business to use money for VAT to pay for its expenses. So the business has to ensure We are advising that the business should make sure that they do a proper budget. The business needs to make a proper budget so that there is enough money available to cover. There is enough money to cover operating expenses of the business, so that the business does not then result to say that they want to use the money collected for VAT to pay for other expenses. So we are saying that the business should use business money to pay for business expenses and not the money that is collected for VAT. Money collected for VAT should be paid directly to SARS and not be used to pay for business expenses. And our advice that we are giving to this business is that they need to ensure that there is proper budget so that there is enough money to cover for operating expenses of the business, so that they do not resort to this unethical practice of then using VAT money to pay for business expenses. So that is all with regards to VAT, which was 1.1. And then now we are proceeding to 1.2, which is now based on creditors reconciliation. 1.2 is creditors reconciliation. Creditors reconciliation. Creditors reconciliation. So we have the creditors reconciliation here. Remember, the creditors are the businesses that are owed by the business. That is where we buy our stock on credit. So the business is allowed that we can order our stock on credit if we do not have enough funds to buy our stock. So if we then buy on credit, those people that grant us credit, that give us credit, are then called creditors. So it is therefore important that every month creditors reconciliation must be done. Remember, we are the business. We have our own records. Let's make an example. If we are buying from another supplier, that supplier also has his own records. So it is important that every month we need to check the records of the supplier against our records so that we make sure that the balance that we owe them is the correct one. So that is why it is important that we do the creditors reconciliation. Remember, after each and every transaction, when we go to buy from them, when we come back, we do have our creditors ledger where we record all the transactions with them. And on the other hand, the suppliers have got their own records wherein they record every transactions that take place in the month, which they use the statement. So now, at the end of the month, it is important that we take our own creditors ledger and compare it to the statement that has been received from the suppliers. And in the case of this activity, we have the two records, the records of Tembega suppliers, the records of Ekasi traders versus the records of Tembega suppliers. The name of our business is Ekasi Traders. So we have the name of our business is Ekasi Traders, and the Ekasi Traders buys on credit from Tembega suppliers. So Tembega suppliers is our creditor. So if you look at information A there in your question paper, you have the creditors ledger account in the books of Ekasi Traders, and we have an account for Tembega suppliers in our creditors ledger. And according to our creditors ledger, we know that we are owing Tembega suppliers 117,200. According to the creditors ledger of Tembega suppliers in the books of Ekasi Traders, we know that we are owing Tembega suppliers 117,200. But according to the statement of account from Tembega suppliers has supplied us with a statement that is indicating that our balance is 157,400. So now you can see that there is a difference between the balance that we know and the balance that has been provided to us by the suppliers. Hence, it is important now that we need to do the reconciliation. So if you look at information C, there are some errors and omission and other information there. I think it is also important that I request that you mark in your question paper, you do this. In your question paper, you go to the creditors ledger. If we do the creditors ledger on our side, creditors, they are regarded as liabilities, so they fall under liabilities account. So I think you need to mark your credit as a plus in the creditors ledger and mark your debit as a minus, because this is a liability account. But on the other hand, the suppliers, when they look at us, they don't look at us as liabilities. The suppliers, when they look at us as their assets, as their debtors. So when they are preparing their statement, their debit side is a plus and their credit side is a minus. So our language is not the same. When we are doing their account on our side, we treat their account as a liability account. Therefore, the credit is a plus and the debit is a minus. But when they are doing their statement, they treat us as an asset. So their plus will be on the debit side and their credit will be a minus. So if you can just mark that accordingly in your question paper. And let us then look at the errors. The errors, omissions, and other information. A, invoice 289 was incorrectly reflected in the account of Tembega suppliers in the creditors ledger. It was incorrectly reflected in the account of Tembega suppliers in the creditors ledger. These goods were purchased from Tami suppliers. So these goods were not supposed to be recorded in the account of Tembega suppliers because they were purchased from Tami suppliers. Then we need to go to the creditors ledger in information A there and check for invoice 289. Let's go there and check for invoice 289. Invoice 289 is there on the 18th in the creditors ledger, and it amounts to 49,100. Invoice 289 is 49,100. So because it does not belong to Tembega suppliers, it belongs to Tami suppliers, we need to take it out there. So in our creditors ledger, we need to subtract 49,100. So we are now subtracting 49,100. Right? B, the second transaction, which is transaction B. Credit note 791 was recorded incorrectly on the statement of account. This relates to the correct entry for debit note 702 in the creditors ledger. So credit note 791 was recorded incorrectly on the statement. Let's go and check for credit note 791. Credit note 791 is 13,100 in the statement. And we are told that this was recorded incorrectly. And this transaction further states that this transaction relates to the correct entry for the debit note 702 in the creditors ledger. So if you go to our creditors ledger, which is information A, debit note 702 is 10,300. So, and 10,300 is the correct amount. So let's then calculate the difference. The incorrect amount is 13,100. That's the incorrect amount. Minus the correct amount of 10,300. Minus 10,300. So there is a difference of 2,800. So there is a difference of 2,800. We said 13,100 minus the correct amount of 10,000. The correct amount is 10,300. Minus 10,300, which then gives us the difference of 2,800. So there is a difference of 2,800. And remember, the debit notes and the credit notes are for the returns. It means in the statement of account of Tembega suppliers, we returned goods, or we were given an allowance of 10,300, but they incorrectly recorded it as 13,100. They subtracted. There is an extra 2,800 that was subtracted incorrectly, because they should have subtracted 10,300 when we gave those returns, but they subtracted 13,100. So therefore, we need to add it back. We need to add back the 2,800, because the credit notes, the effect of the credit notes is a minus. So if you subtract 13,100 instead of 10,300. It means you have subtracted more. Therefore, you need to add it back, the amount that you have subtracted, which is extra, and that is 2,800. And in this case, we have a plus 2,800 in the statement. Right, we are proceeding to transaction C under the errors, omissions, and other information. Invoice 395 on the statement of account was for goods ordered by Ekasi Traders. Invoice 395 on the statement of account was for goods ordered by Ekasi Traders. If you go there, there is invoice 395 of 12,500 in the statement of account. And this transaction is indeed confirming that these goods were ordered by us, this 12,500. But if you look at our records in the creditors ledger, the 12,500 is not reflected there. So it means we have not recorded this invoice 395 of 12,500. So what do we then need to do? In our creditors ledger, we need to add 12,500. 12,500, which is invoice 395. Because the 12,500 only appears in the statement. Remember, for these two books to reconcile, for the ledger and the statement to reconcile, everything that is in the statement must also be in the ledger. Everything that is in the ledger must also be in the statement. Because what we want to do is that when we get here to the totals must be the same. If the totals are the same here, it will then mean that our reconciliation has been done successfully. Because at the beginning, the totals are not the same. According to us, we know that we are owing Tembeka Suppliers 117,200. But according to Tembeka Suppliers, he's giving us a statement with a balance of 157,400. So that is why we are now doing this reconciliation. And by the time we get here, we want to get the same total so that we know that our job has been done successfully. Let us then proceed to information D, transaction D. Tembeka Suppliers also purchase goods on credit from Ekasi Traders. Ekasi Traders has transferred a debit balance from the debtors ledger, Journal Voucher 585. Tembeka Suppliers will include this on the next statement. If you look at the creditors ledger, there is a Journal Voucher of 585 for 6,400. And it's on the debit side of the creditors ledger, which is a minus. So there is a minus 6,400 in the creditors ledger, and therefore the statement should also have a minus 6,400. So here in the statement, we need to subtract 6,400. Whatever appears in the statement must also be in the ledger. Whatever is in the ledger, it must also be in the statement so that we make sure that the two totals are the same. So that is transaction D, where it was appearing only in the creditors ledger, and we have now recorded it in the statement. In the creditors ledger, it is on the debit side, which is indicating a minus, and therefore even in the statement it should be a minus. Transaction E. The transaction on the 24th of April 2021 is for merchandise returned to Tembeka Suppliers. The transaction on the 24th. If you look at the statement, which is transaction B, the statement, the transaction is recorded correctly. It's a credit note and is recorded on the credit side. But if you go to our creditors ledger, this transaction, the very same transaction, is a debit note, which is correct. In our creditors ledger, it is supposed to be called the debit note because our minus here is on the debit side. But if you look at the creditors ledger, the debit note is written correctly, but the amount is not on the debit side. The amount is on the credit side. And the credit side of the creditors ledger is a plus. So it means that 9,700 was recorded incorrectly. It was supposed to be subtracted, but we added. So we therefore need to correct that. The 9,700 was supposed to have been subtracted, but it was added by mistake. So it's like when a person is owing, let me just give you just small amounts. Let's say a person is owing you 100 rand. and this person pays you 50 rands. Pays you back 50 rand. Your balance will then be, the correct balance will then be 50 rand. Because this person has paid 50 rand. And let's say now, this person is paying you 50 rand, and by mistake, you do not subtract here. You just add by mistake, and then the balance goes up to 150. When the correct balance is supposed to be 50 rand. When now you have to correct this, then it will mean that you will have to subtract 50 rands twice for you to get to the correct amount of 50 rand. Because if you only subtract it once, the first one is cancelling the wrong transaction, and the second one, it is when you are now doing the correct thing. So that is why if you say 150 minus 50, if you can only subtract it once, the balance will go back to 100. But that is why it is important that you need to subtract it twice so that you get to the correct balance. This is what happened here. So here you have the 9,700, which was supposed to have been subtracted, but it was added. So to correct this in the creditors ledger, you need to subtract 9,700 twice. And it's correct, but if you can just say 9,000 in your calculator, 9,700 multiplied by 2, and then you write just one amount here. I think 9,700 multiplied by 2, that is 19,400. So if you can just write 19,400 in the creditors ledger, it will still be correct. But we want to show the two 9,700s to understand. The first minus 9,700 is correcting the plus 9,700. And then the second one, it is when we are now doing the correct thing. Right, transaction F. Transaction F, it tells us that the statement of account reflects transactions up to 25 April 2021. It reflects transactions up to 25 April 2021. The statement ends on the 25th of April, whilst the ledger ends on the 31st. So let's go and check for a transaction which is missing in the statement. There is that transaction on the 25th for 6,400, which was missing in the statement, and we have already recorded that 6,400. And now there is another transaction on the 31st, which is in the creditors ledger, but is not appearing on the statement. So that was check and discount, which is 92,600. Therefore, it needs to be included here in the statement. So there is a 92,000 minus 92, because we want everything that is in the ledger to also appear in the statement. So we have minus 92,600. How do we know that it is a minus? It is recorded on the debit side in the creditors ledger, and the debit side of the creditors ledger is a minus. So whatever happens in the creditors ledger, it should be the same thing that will happen in the statement of account. So we have minus 92,600. Right. So now we are in the final stage of this reconciliation. We want now to check if the two totals will be the same. If the two totals are the same, then it will mean that our reconciliation has been done successfully. So we will start by calculating the creditors ledger side. So the opening balance was 117,200 minus 49,100 plus 12,500 minus 9,700 minus 9,700. So I am getting a total of 61,200 here. Let me also calculate the second side, which is for the statement of account. The opening balance is 157,400. 157,400 plus 2,800 minus 6,400 minus 92,600. The total is 61,200. So the total is 61,200. So now the balance according to us, Ekasi traders in our creditors ledger, after doing all the corrections that we were given as per information C, the balance according to the creditors ledger is now 61,200. And also again, the balance according to the statement after considering all the errors and omissions, the balance is now 61,200. So these two totals now are now in agreement, which then tells us that the reconciliation has then been done successfully. So our creditors reconciliation has been done 100% correct. How do we see that? The two totals are now the same. Right. And then the last question under creditors reconciliation will then say, it says 1.2.2, refer to information C. Information C is the one that was talking about an invoice which appeared in the statement, and this invoice was not on our records as the business. We are now being referred to that transaction, and we are told that it was discovered that the purchasing manager, Bradley, had taken these goods for his personal catering business, and the owner regards Bradley as a valued member of the staff and does not regard this as theft. What should the owner say to Bradley regarding this incident? Explain 2 points. So what we are getting from this transaction C is that there is an invoice which came to us as a business, as a surprise to us as a business, which is invoice 395 for goods valued at 12,500. And we only learned about that invoice from the statement. And this invoice was not appearing in our records of the business. And we are now discovering that the purchasing manager has purchased these goods for his personal catering business and decided not to record these goods in our records. So the owner regards Bradley as a valued member of staff and does not regard this as theft. What should the owner say to Bradley regarding this incident? Explain 2 points. So we want to write 2 points with regards to this. So the first thing that we should also tell the owner is that it is wrong for the owner to not regard this as theft. This is theft. Bradley is misusing or is abusing his position. Bradley is abusing his position as a purchasing manager. And what is it that we are recommending is disciplinary hearing. We can't have a person buying his personal catering goods and using the name of the business and not disclosing that to the business, and then we say it's not theft. So this is theft. Bradley is abusing his position as a purchasing manager, so disciplinary hearing should be conducted. And then maybe the second point will be money to be recovered from his salary. Money to be recovered from his salary if this person will continue working for the business. But if the person is suspended or is being dismissed from work, then this money will then be recovered from his pension money or where we can be able to recover it. But it should be noted that accounting students should be aware that theft is a dismissible offense. So we are encouraging that accounting students must understand that when you are dealing with money, you need to be as honest as possible, because even if it is one incident of stealing, the owners of the business would never know how many times have you been stealing. So therefore, when they are taking action, they will always be harsh, and you will not be even protected by the unions when it comes to stealing. So we are saying here that this is Steph Bradley is abusing his position as purchasing manager. Disciplinary hearing should be conducted, and if this person is found to be guilty, he may also be given warning or even dismissed. If he is not dismissed, then that money will have to be recovered from his salary so that it does not happen again. So this brings us to the end of question 1 from accounting November 2020 in bracket 2 paper. The question 1 was based on VAT and creditors reconciliation. So let's pause here for now so that we will then proceed to question 2. Yeah, welcome back. We are still in accounting November 2022, paper 2. This is paper 2, and we are now doing question 2. Question 2. And question 2 is based on manufacturing, cost accounting. It's based on cost accounting. Question 2 is based on cost accounting, manufacturing. The most important point that you need to keep in mind is that when you go to a manufacturing industry, you will find that there will be 3 departments. There are 3 departments there. 3 important departments. The first one is the administration department. That's the first department. The first department is the administration department, where you will find office workers, people who are working in the office. And then the second department will be your factory. Your factory. And that is where production takes place, in the factory. Your factory, that is where your production takes place. That's where production takes place. That is where production takes place. And then the third department will be your selling and distribution department. Selling and distribution. The third department will be your selling and distribution department. So now, our question 2 is requiring that we do the production cost statement. The first thing that is required there is the production cost statement. And then the production cost statement will be under this department, which is the factory department. And we must understand, it is important that we always emphasize that under the factory department, there will be 3 costs involved under the factory department where production takes place. There will be 3 costs involved again. The first cost will be your direct material cost. The first cost will be your direct material or your raw material cost. Here we are referring to the materials that are required for the production process to take place. But these materials also form part of the finished product. How do we? Because we have the direct material cost and also the indirect material cost. But for now, we are talking about the direct material cost, the materials that are used in the production process and which also form part of the finished product. We also have the second cost, most important cost here when we are doing production, which is the direct labor cost. Here we are referring to the money that is paid to the workers who are actually doing the production. This is direct labor cost. And then the third cost will be your factory overheads. Your third cost will be your factory overheads. Your factory overheads, that is where, under factory overheads, that is where you will have your indirect materials. You will have your indirect materials here. That is where you will have your indirect labor. and all other factory expenses. And other factory expenses. So you have your direct material cost, which is a standalone note. You have your direct labor cost. So maybe one will have a question, what will be the difference between the direct materials and the indirect materials? So the direct materials are the materials which are used in the production process, and they also form part of the finished products. But the indirect materials, these are the materials which are necessary for production to take place, but they do not form part of the finished product. Like for example, the production that takes place in our homes will be like when people are producing fat cookies. So like if you are producing the fat cookies, your direct materials will be your flours, will be your cooking oil, will be your salt, will be your yeast. All that will be your direct material because it will form part of the finished product. But you cannot be able to do that production using dirty pots, or maybe do that production in a dirty environment. You will need the cleaning materials. So the cleaning materials are necessary for the production to take place, but they do not form part of the finished product. Therefore, the cleaning materials will be regarded as indirect materials, and those will go under what? Under factory overheads. Same thing applies with the direct labor cost. The direct labor cost, this is the money paid to the workers who are actually doing the production. But when it comes to the indirect labor, we are referring to people working in the factory, but who are not doing production. Like for example, the factory foreman is there as a supervisor, but is not actually doing the production. Like the factory cleaner, that will be regarded as indirect labor. But those workers who are actually doing the production, when they are paid, we said that is direct labor cost. And you have other factory expenses like water and electricity, insurance of the factory, all other factory expenses. So the indirect materials and indirect labor and all other factory expenses will go under factory overheads. And then the direct material cost is a standalone note, the direct labor cost is a standalone note. So hence we are saying we have three costs. We have the direct material cost, the direct labor cost, then we have factory overheads. And if the combination of the three costs will then give you your total cost of production. So let us then look at this production cost statement for the year ended 28 February. The production cost statement is the structure of the production cost statement, and it does not change. It does not change. When you are writing an exam, you should always know that you will have your direct material cost plus your direct labor cost. And if these two costs are added together, they will give you a total, and that total is called the prime cost. This is the primary cost. When you are adding material cost plus labor cost, then the total is the prime cost. When you add your total factory overhead cost, that is where you get to your total manufacturing cost. That is the total cost of production. And then you add work in progress at the beginning. That is the work that we did not finish in the previous accounting period. You add the amount of that work, and then you subtract the work in process at the end. You then get to the final answer, which is the total cost of product, or the cost of production of finished goods. That's the cost. I think the correct term that we should be using there is the cost, total cost of production of finished goods. Total cost of production of finished goods. So let us then go to our question paper. Question paper, we have question 2, cost accounting, manufacturing, and it's 50 marks, 40 minutes. The business produces formal shirts. The financial year ended 28 February 2021. You are required, prepare the production cost statement. And the information that we are having here, information A is the stock on hand. Information B is the bookkeeper calculated the cost below. Some errors were made. The first cost is direct material cost, and the direct material cost given here in the question paper is 1,575,000. Direct material cost is 1,575,000. Direct material cost is 1,575,000. And there are some errors and omissions here. The first error in information C, we are told that the payment to quick deliveries of 75,000 for carriage on raw materials was incorrectly allocated to the selling and distribution cost. So this was the payment to quick deliveries for 75,000 carriage on raw materials. So this one is for the direct material cost. So we need to add 75,000 here. Remember, in accounting, the transport cost also forms part of the value of stock. So if we buy raw materials to the value of 20,000 and then we transport those materials by 5,000 rands, so the total value of the materials will then be 25,000. So the cost will be 25,000. So transport cost or carriage on purchases forms part of the value of stock. So we bought materials to the value of 1,575,000 and the transportation cost was 75,000, and they left it in error. They did not add that 75,000. So let us then add it. We have 1,575,000 price of the materials plus transportation cost, which is carriage on purchases of 75,000. So the total material cost is 1,650,000. Total material cost is 1,650,000. Right? And then the direct labor cost is not given here. So we are given just a question mark next to the direct labor cost. The amount for the direct labor cost was not given. But if you look at information D, the prime cost is given here. We are told that the prime cost, after all adjustments have been considered, the prime cost is 2,550,000. The prime cost is 2,550,000. So they have given us the prime cost, but they decided not to give us the direct labor cost. So which is then easy for us to get the direct labor cost if we have the prime cost, because we know that direct material cost plus direct labor cost will give you your prime cost. So to get the direct labor cost, you just have to take your prime cost, which is 2,550,000, 2,550,000, and then you just subtract the direct material cost of 1,650,000. 1,650,000. So that is 900,000. So the direct labor cost is 900,000. Because we know that if we add the two amounts, if you take the 900,000 and you add to 1,650,000, 1,650,000, you should get 2,550,000. So I think here they wanted to know if the student is aware that the prime cost is made up of direct material cost and direct labor. That is why they did not give you the direct labor cost amount. They just gave you the material cost and the prime cost. So if you know that the material cost plus labor cost will give you the prime cost, so it's easy. You just take your prime cost to subtract the material cost to get the direct labor cost of 900,000. Right. Then now we want to calculate factory overhead cost. Let's see what is given here. The factory overhead cost is given at 518,800. Factory overhead cost is 518,800. That's the amount given before considering the adjustments which are here. So let's look at the adjustment. There are the first adjustment here, which is under information C bullet 2. It says the entire insurance amount of 25,200 was transferred to the administration cost account. 2/3 of this expense should be allocated to the factory. So the entire amount of 25,200 was transferred to administration cost, whereas 2/3 of that amount should have been allocated to the factory. So the 25,200, it says here 2/3 of this amount should be allocated to the factory. It should be part of factory overheads, because insurance is just other factory expenses, so it will be part of factory overheads. So 25,200, 2/3 of this amount should have been allocated to the factory. So that's 25,200 multiplied by 2/3. So it's 16,800. So 16,800. Factory overhead cost, we have another factory expense, which is insurance, and the amount for factory insurance is 16,800. Remember, that is why I emphasize that here we are dealing, in a manufacturing industry, we are dealing with 3 departments. So if we are focusing on the production cost statement, so all expenses that should be here, it should be expenses that are relating to the factory only. Even if it is for water and electricity. If the company paid 1 million for water and electricity, we need to know the exact amount that if it is 1 million, but out of that 1 million, we need to know the exact amount for water and electricity for the factory. So here, this 25,200 is the insurance cost for the whole factory, which is covering all departments, admin, factory, and selling and distribution. So, but we wanted to know the cost for the factory insurance, and this transaction is therefore giving us a direction by saying that 2/3 of this amount, 2/3 of this insurance amount should be allocated to the factory. So 25,200 multiplied by 2/3, 2/3. So the factory insurance is 16,800 plus. The factory overhead cost account included an amount of 117,600 for water and electricity. But the bookkeeper had incorrectly allocated this expense to factory administration and selling and distribution in the ratio 6:3:1, but the correct ratio is 5:4:1. So the factory overhead cost account included an amount of 117,600. So the first thing, because we are told that this amount is incorrect, we need to subtract it from here, because this transaction is telling us that this amount was included. So therefore it will be, the first correct thing to do is to subtract this 117,600. So let's subtract the 117,600, and then we need to work out the correct amount on the side. We are told that the 117,600 for water, the bookkeeper had incorrectly allocated this expense to the factory, admin and selling it in the ratio 6. And the correct ratio is 5. Because it's 6:3:1 and 5:4:1. So we calculated, because 6 is representing the factory, 3 is representing admin, and 1 selling and distribution. But the correct ratio should have been 5. Representing the factory, and 4 representing the admin, and 1 representing the selling and distribution. So it means this 117,600 was calculated using 6, and we want 5. So let's multiply it with 5, because 5 is the correct amount, and divide it by 6, because it was calculated using 6. So now you have your 117,600 multiplied by 5/6. I think this money, because it was calculated using 6, it will go down a little bit. So let's say 117,600 multiplied by 5/6. That's 98,000. So the correct amount is 98,000. So we are now multiplying with the correct amount, and we are dividing by 6, because this 117,600 is represented by this 6. So the correct amount, so we are taking out the 117,600, we are now adding the correct amount, which is 98,000. So now the error has been corrected. So let's then calculate the correct total for factory overhead cost. The amount which was given was 518,800 plus 16,800. That's plus 16,800 minus 117,600 plus 98,000. Plus 98,000. 117,600 plus 98,000 equals to 516,000. Factory overhead cost, the correct total now is 516,000. 518,800 plus 16,800 minus 117,600 plus 19,000. 98,000. Right. Then prime cost plus this 516,000. So 2,550,000. 2,550,000 plus 516,000 equals to 3,066,000. 3,066,000. It's very important to ensure that you use your calculator correctly so that you do not calculate incorrect. You give incorrect total. 580, let me just verify these amounts. Minus 117,600 plus 98,000 plus 2,550,000. Yes, the total manufacturing cost is 3,066,000. Work in progress at the beginning, this amount is given. Work in progress at the beginning is 230,000. 230,000, 1st March 2020. Work in progress at the beginning is 230,000. So we are adding this to this amount. This is plus 230,000. It is giving 3,296,000. 3,296,000. 3,296,000. Minus work in progress at the end to get to the final answer. Minus work in progress at the end. Work in progress at the end was not given. There is a question mark there. If work in progress was given, we would just subtract and get to the final answer, but it was not given. So let us check our transactions. Maybe there is something which will give us a directive as to what to do, because this amount was not given. So if you look at information E, the final answer is given there. We are told that 7,600 shirts were produced at a unit cost of 420 each. 7,600 t-shirts. 7,600 t-shirts were produced at a unit cost of 420 each. 7,600 multiplied by 420. 7,600 multiplied by 420. 7,600 multiplied by 420 equals to 3,192,000. 3,192,000, which is the final answer. And if you can just reverse to this amount, we can be able to get the amount that is supposed to be the work in progress at the end. It will be 3,192,000 minus 3,296,000. And the answer will be in brackets, which is 104,000. So 104,000 is here. Our work in progress at the end is 104,000. And you can prove this by taking this 3,296,000 minus 104,000. Then the final answer will be 3,192,000. So, which is our total cost of production of finished goods, which is 7,600 multiplied by 420 gives you a total of 3,192,000. So the production cost statement is simple and straightforward. What is important with the production cost statement is for you to understand that our main focus is on the factory department. Whatever amount that does not relate to the factory, which relates to other departments like admin and selling and distribution, those amounts are not included here. Here, when we are dealing with production, we are only focusing on the expenses which are relating to the factory, so that we are able to calculate the correct production cost at the end here. Right. So we are done with the production cost statement. We are proceeding to 2.1.2. 2.1.2. Calculate the gross profit earned on the sale of shirts, 5 marks. We want to calculate the gross profit earned on the sale of shirts. Gross profit earned on the sale of shares. That is 2.1.2. 2.1.2. The gross profit. How are you going to calculate the gross profit? It will be sales minus cost of sales. Sales minus cost of sales equals to gross profit. The gross profit earned on the sale of shares. Right. The sales amount is here in information E. It is 4,860,000. The sales amount is given. It is 4,860,000. 4,860,000. But cost of sales is not given. Cost of sales amount is not given. What is it that is given? We have our finished goods stock at the beginning. The stock that was ready to be sold. The cost of the stock that was ready to be sold at the beginning of the year was 342,000. This is the stock that was available for sale at the beginning of the year. Plus the stock that we produced and finished in the current year, which is 3,192,000. This is the stock that we produced and finished in the current year. Right? Minus the stock that is left at the end. The stock of finished goods left at the end is 400 shares. And we know that each shirt cost 420. So the stock that is left is 400 shirts. So it will be 400 shirts, and each shirt cost 420. It will be 400 multiplied by 420. So the value of the closing stock here of finished goods is 168,000. So our sales, it will be 4,860,000 minus our cost of sales. Let's calculate our cost of sales. The stock that was available for sale was valued at 342,000. We produced another goods and we were able to finish them to the value of 3,192,000, which tells us that the stock that was available to be sold valued at 3,534,000, but we did not manage to sell all this stock because we have this 168,000 left, minus 168,000 left. So therefore, our cost of sales is 3,366,000. And then gross profit, 3,366,000. So now you have your sales of 4,860,000. Sales of 4,860,000 minus cost of sales of 3,366,000. 3,366,000. 4,860,000 minus 3,366,000. And then our gross profit will be 1,494,000. Gross profit is 1,494,000. Right. So gross profit, it is sales minus cost of sales. And still on 2.1.2, they want us to calculate the markup percentage. They want us to calculate the markup percentage. Markup percentage. And the formula of calculating the markup percentage, it is gross profit over cost of sales times 100. Gross profit over cost of sales times 100. That is how we calculate the markup percentage. So we do have our gross profit, and our gross profit is 1,494,000. Our gross profit is 1,494,000. 1,494,000. And our cost of sales is 3,366,000 multiplied by 100. Gross profit over cost of sales times 100. Right. 1,494,000 1,494,000 over 3,366,000. 3,366,000 times 100 multiplied by 100 is 44.38. So that's 44.4%. Our markup percentage is 44.4% or 44.3. So if it is 44.38, so then if you round it off, it will be 44.4%. So our markup percentage is 44.4%, right, which brings us to the end of 2.1. And then if you will open our question papers on the following page. The following page is page 7, but we are still on cost accounting. And we have 2.2 there, question 2.2 for leather manufacturers. 2.2 is for leather manufacturers. Leather manufacturers. Right, which is on page 7 of the question paper. Right, leather manufacturers is owned by Tello Andrews, and they produce leather purses and leather jackets. So this business is producing leather purses and leather jackets. The financial year ends on 28 or 29 February each year. Required for the purses. Calculate the break-even point for the purses for the year ended 28 February 2021, 4 marks. So we are starting with the purses. We want to calculate 2.2.1. 2.2.1. We want to calculate the break-even point. Break-even point. And it is abbreviated BEP. The break-even point is the point at which neither profit nor loss is made. So it means if like for example, if you are in a production process, like I made earlier on, I made an example of amakwenya or fat cookies. If you are in the production process, you should be able to tell how many fat cookies must be made and sold before the business start making a profit. If you are carrying a bucket which has got 300 inside the bucket and you are going to sell, you should know exactly how many in that bucket will cover your total cost of production. So you should know that out of this 300 that I'm carrying, if I can be able to sell 160, I would have covered all my cost. So the 161 one and the 162, 163 will then be my profit. So if 160 will be the number that will be covering all your total production cost, then 160 will be regarded as the break-even point. So the break-even point is the point at which neither profit nor loss is made. So there is a formula of calculating break-even point. There is a formula of calculating break-even point. It says total fixed cost divided by selling price per unit. Selling price per unit minus variable cost per unit. Total fixed cost divided by selling price per unit minus variable cost per unit. So we are calculating this break-even point for 2021 and we are calculating it for the purses. So let's go to the information for purses and look for the total fixed cost. The total fixed costs are given, we have given the amount there. Total fixed cost is given and it is 936,000. Total fixed cost is 936,000 over selling price per unit. Selling price per unit is given for 2021, it is 295 rand. minus variable cost per unit, and the total variable cost is also given for 2021. It is 255. 295 minus 255 is 40. So you have your 936,000. You have your 936,000 divided by 40, because 295 minus 255 is 40. 936,000 divided by 40. So our break-even point is 23,400. Break-even point is 23,400. This business needs to sell 23,400 or more. Because if they can sell less than 23,400, it will then indicate that this business is running at a loss. Because the break-even point, is the minimum number that is required, minimum number that must be sold. Because if this business can sell exactly 23,400 pieces, it will mean they have neither made profit nor loss, because it will just be an exact amount that they have spent on the production of these pieces. So that is why we need to produce and sell more than 23,400 for us to be making a profit. So this then leads us to the following question. After we have calculated the break-even point, we now know that we cannot afford to sell less than 23,400, because that will be an indication that the business is running at a loss. So the following question, which is 2.2.2, is now asking us to comment on the level of production achieved and the break-even point for pieces for 2021. Quote figures. Quote figures. That is 2.2.2. We are now required to comment. Comment on the level of production achieved. If you look at the number of units, it is given there for pieces for 2021. The number of units produced and sold is 24,000. And we need to make a comment. We know that the minimum number is 23,400, but this business has managed to produce and sell 24,000. So if then we are required to comment, looking at the level of production and the break-even point, we can therefore safely say that the number of units produced, is 600 more than the break-even point. It is 600 more than the break-even point, which indicates that the business has made profits. The number of units produced is 600. Where am I getting the 600? I am comparing the total number of units produced, which is 24,000. That is 24,000, the total number of units produced, and the break-even point is 23,400. So 24,000 minus 23,400 equals to 600. So we were fortunate that the number of units produced and sold is more than the break-even point by 600 units, which therefore indicates that the business has made a profit. 2.2.3, apart from inflation and wage increases, give two other possible reasons for the increase in the direct labor cost per unit for pieces. So apart from, this is 2.2.3. 2.2.3. Apart from the inflation and wage increases, give two other possible reasons for the increase in the direct labor cost per unit for pieces. If you look at the direct labor cost per unit for pieces, 2020 it was 105 per unit labor cost. And 2021 is 135. And we are asked to think, this one is just a question that requires your general reasoning. Because we are asked to think of two possible reasons other than inflation or wage increases? What is it that can increase the cost when the workers' wages have not been increased, but the cost has increased here? What would be the possible reasons for that? Maybe the first one will be that there was more overtime. More overtime. This can increase the labor cost when there is more overtime, apart from increasing the wages of the employees. But if you give more overtime, the labor cost per unit will then increase. If there are also some disturbances during production, and therefore workers had to work again extra hours, like for example, if there is load shedding, it might also be another reason. Load shedding might also be another reason for this labor cost, because if there was disturbance in the production process, load shedding during normal time, and therefore had to work extra hours. But remember, in accounting, we are not marking the language. Even if the learner has just written load shedding, we would understand as the accounting markers that what the learner means there. So there is no need to write the full sentence, but we are just explaining it to you that maybe load shedding, how can this have a contribution to the price increasing? Right, we have 2.2.4. 2.2.4. 2.2.4, give two reasons for the decrease in the direct material cost per unit for persons. Give two other possible reasons for the decrease in the direct material cost per unit for the persons. If you look at the persons, the material cost per unit last year in the previous year was 125, and it has gone down to 100. What is it that can decrease the material cost? These are also the questions that requires just your general reasoning. What is it that can decrease the price of the material cost? Maybe there was a change to a cheaper supplier. Changed to a cheaper supplier. This will decrease the material cost. If the business has decided to change to a cheaper supplier, then the material cost will go down. Another possible reason for the decrease in the material cost is that if there is less wastage of materials. That is why when we are in the production, you must encourage your workers to be as efficient as possible. If they are not efficient, then it is important that they need to be taken to training. We need to organize workshops for them so that to improve efficiency. So if there is less wastage of material, the cost will go down. If you can imagine in the example that I made, when we are baking cakes and people are wasting flour, they prepare it and then suddenly they discover that they added too much sugar and then they throw it away, they put another flour. So if people are wasting, then the material cost will go high. But if they are efficient, there is less wastage. That will be a result of what we see now when the material cost is now going down. We might have changed to a cheaper supplier, or there is less wastage. And then this brings us to the second, which is the last section of jackets now. The second section here in question 2, which is the last section of jackets, and we are in 2.2.5. The second section of jackets, 2.2.5. Although Taylor was aware that importing leather for the jackets, would increase the direct material cost per unit, he thought that this would improve the quality of the jackets. So now Taylor was considering importing leather, but he was aware that it will increase the labor cost. Explain why the direct material cost per unit for jackets would probably increase if raw materials were imported. State 2 points. If raw materials were... explain why the direct material cost per unit for jackets would probably increase if the raw materials were imported. There is a lot. Transportation cost. If you are now buying from another country, the material cost will increase because these materials will have to be transported from that country to where we are. So therefore, transport cost will also increase the material cost. The second, you have your import duties. If you are buying from other countries, there are some additional charges, additional costs, which are also added in those raw materials, and we call that import duties. They are added because you are buying from other countries. So there are import duties which are levied on those items which are purchased from other countries. So therefore, the transport cost will increase the material cost, and even the import duties will also increase the material cost. Provide figures. That is still 2.2.5. We are then asked to provide figures to prove that Taylor was correct about the effect of this decision would have on the cost of jackets. Taylor was saying that if we are importing leather, the material cost will be high. And then let us then provide figures. Let's go to the material cost. Material cost was 180 last year, and now the material cost is 360. Direct material cost per unit. Direct material cost per unit increased from 180 to 360. 100% increase. This is 100% increase. So Taylor was correct that if this business decides to buy leather from other countries, the direct material cost will increase. So this is proved by these figures now that last year the material cost per unit was 180, and now the material cost is now 360, which is 100% increase. Right, 2.2.6. 2.2.6. Calculate the percentage increase in the selling price of jackets. The percentage increase in the selling price of jacket. Right? Their jackets are now sold for 1,170. Jackets are now sold for 1,170. And then in the previous years, they were sold for 780. For 780. Let's start by, before we can even calculate the percentage increase, let's calculate the increase. How much is the increase? 1,170 minus 780. So there is an increase of 390. 390 increase. So the percentage increase will then be 390 increase over the price. The price was 780. So 390 over 780 multiplied by 100, you will get the percentage increase. 390 over the initial price, which was 780. So this 390 was added on top of 780 to get 1,170. So we want to know what percentage is 390. What percentage for 708? So that's 390 over 780. 390 over 780 times 100. So the percentage increase in the selling price was 50%. Percentage increase is 50%. So the selling price of jackets, now that we are importing leather from other countries, the material cost has increased per unit by 100%, and even the selling price has also increased by 50%. The percentage increase is 50%. And now we are asked in 2.2.7, 2.2.7, you can see that the first question, that all these questions are leading to other questions, because if you look at 2.2.7 now, they want us to explain the impact of the increase in the selling price of jackets on the sales and profit, quote figures or calculation. The impacts on the sales and profit. If you look at the number of units sold in 2020, it was 6,350, and 2021 now it is 3,600. Number of units. Sales dropped. Sales dropped from 6,350 to sales dropped from 6,350 to 3,631 to 3,631. So sales dropped from 6,350 to 3,631. And even when you look at in terms of profit, the number of units produced and sold is 3,631, but the break-even point is 3,750. Let's calculate the difference. We needed 3,750 units to break even, but we have only sold 3,600. We have sold less than the break-even point. Let's calculate 3,750 break-even point, because this is the minimum number of units that must be sold. But this business has only sold 3,631. So 3,750 minus 3,631 and 31, 119. Is 119 less than the BEP. Made a loss. The number of units sold is 119 less than the break-even point. The number of units sold, if you look at the question paper, is 3,631 in 2021, when the break-even point for 2021 is 3,700. So this business could not even cover the break-even point, could not even cover the total cost of production. So if you look at that, it's then telling us that 100, we have sold 100 less than, 119 units less than the break-even point, and therefore the business has made a loss. And this is now leading us to the last question. The last question. Telo wants to increase profit on jackets by an additional 250,000 in the next financial year. Assuming that the cost structure remains the same, calculate the total number of additional units he must produce to achieve this target. Okay. So let me just use this space here. Let me use this space here. This is question 2.2.8. 2.2.8. The first thing that we need to calculate here is the contribution per unit. Contribution per unit. The contribution per unit, how do you calculate it? It is selling price minus variable cost per unit equals to contribution per unit. Selling price per unit minus variable cost per unit equals to contribution per unit. We want to know the contribution of each unit to our profit. So the selling price here is 1,170. 1,170 is the selling price minus a variable cost per unit. For 2021, the variable cost per unit is 700. Equals to contribution per unit. 1,170 minus 700. 1,170 minus 700. This is giving us the contribution. Each unit contributes 470 to our profit. Each unit contributes 470 to our profit. So if we want to reach a target of an additional 250,000 profit, then it means we need to take this 250,000 and divide it by 470 so that we know the total number of units that we need to produce. Telo wants to increase profits on jacket by additional 250,000 in the next one. Assuming the cost structure remains the same, calculate the total number of additional units he must produce to achieve his target. Yes. So each unit is contributing 470 into our profits. So if we want to achieve a target of 250, if we want to know the number of units that we need to add, let's divide this 250,000 by 470. 470, which is our contribution per unit. So 250,000 divided by 470. This will give you 532 units. It's 531,9. So that is 532 units. So if this owner wants to achieve an additional 250,000 profit in the next financial year, it will mean that he will also have to increase the total number of units produced by 532 units in order to achieve this target. So this now brings us to an end of our question 2. Our question 2 from November 2020, question paper 2. That is question 2, which was based on cost accounting and manufacturing. Perfect manufacturers and leather manufacturers. So our following lesson will still be based on the very same paper, which is paper 2, and we will then be continuing to question 3 and question 4. So thank you very much. Good day, everyone. We are doing accounting, National Senior Certificate. We are specializing with this paper for now, which is November 2022. Accounting November 2020 in bracket 2. We are doing paper 2. We have already done question 1 and question 2 of this paper, and today we are continuing with question 3. And question 3 is based on budgeting. Question 3 is based on budgeting. Budgeting. It is very important that the business needs to budget so that it does not experience cash flow problems. So this section is a very important section of the business, because if the business is failing to budget accordingly, then the chances that the business may run out of cash, they are very high. So therefore it is important that the budget must be done properly, so that we are able to meet the daily life expenses of the business, the daily operations of the business, and all the expenses that are incurred on daily basis. So this is the budget. Question 3, it says Blossom Pty Ltd sells expensive ladies' dresses of high quality. They also repair dresses for customers, but they aim to break even on this service. Customers are allowed to buy dresses for cash and on credit, but they are required to pay cash for all repairs. The information relates to the budget period ending 31st May 2021. So our budget period ends on the 31st of May. We are budgeting for 3 months. We are budgeting for March, April, and May. Right. The first thing maybe that one needs to clarify here is that when the business is selling, you will have something that is called total sales. Total sales. And the percentage for total sales is 100%. The percentage for total sales is 100%. The total sales will give you 100%. But the business, there are 2 methods of selling. The business can either be selling for cash or be selling on credit. Selling for cash or be selling on credit. If the percentage for cash sales is 60%, for example, it will then mean that the percentage for credit sales will be 40%, because the total sales percentage is 100%. So it's very easy in the business to budget for the cash sales, because when you are selling for cash, when you are budgeting that you are going to sell for cash for 100,000, you know that you will be selling and at the same time you will be receiving that cash. So if your budget is 100,000 cash sales, it means those cash sales, that amount, you will get it on at the same time. So it's very easy to budget for the cash sales. But the problem comes when we now have to deal with the credit sales. It's very difficult to budget for the credit sales, because when you are selling on credit, you don't get cash at the same time. You're selling to your customers, and then your customers are paying you at a later stage. So that is why when you have to do the budget, there is a schedule that is very important for you to do before you go to the cash budget, which is called the debtors collection schedule. Because remember, the people that buys on credit from us, when we are selling on credit, those people are given a special name. They are called debtors. And when we are selling to them, we do give them the credit terms as to how are they expected to pay us. So therefore we can be able to budget accordingly, because we know how are we going to collect our money from them. And we also focus on the past experiences as to how have they been paying us, and therefore be able to establish as to how are we collecting the money from the debtors. When you look at this business, if you go to your question paper now, on page 10 of the question paper, question 3, there is information A there. Information A has got total sales and cost of sales. We have the total sales for March, April and May. And there's a transaction there which tells us that goods are sold at a markup of 75% on cost, and credit sales are expected to be 65% of the total sales. Credit sales are expected to be 65% of the total sales. If credit sales are expected to be 65% of the total sales, then that tells us that our cash sales is 35%, because total sales should give us 100%. So here we are selling on credit, and the percentage for credit sales is 65%, and therefore for the cash sales it will then be 35%. And if you go to transaction B, we have our expectations there as to how are we going to collect the money that is with our debtors. When we sell on credit, how do we then collect our money? So expected debtors collection based on the past. So in the past, 40% collected in the month of sale. There is 40%. 40% is collected in the month of sale. 40% collected in the month of sale. 40% is collected in the month of sales for a debtor to qualify for 6% discount. 40% is collected in the month of sale, and therefore you will then have a 6% discount. In most cases, businesses, when you are paying within the month of sale, you qualify for a discount. That is another form, that is another way in which businesses encourages people to pay as early as possible, because they tell you that if you pay within the month of sale, if you buy in March and you come back at the end of March, you pay same time, you will then qualify for a 6% discount. And then 50% is collected in the month following the month of sale. So the first collection is 40%, the second collection is 50% in the month following the month of sale. The second collection is 50% in the month following the month of sale, and then 8% is collected 2 months after the sale. And then the third collection is 8%. The third collection is 8%, and then we are told that 2% is regarded as uncollectible. So 2% is bad debts. 2% bad debts. So 2% is bad debts. Remember, when you are budgeting for something that you have not yet received it. We are budgeting for the money that we are going to be collecting from the debtors, and it is always right to leave that room for disappointment. You cannot be budgeting for 100%. If you look at this business is not budgeting for 100% because they are budgeting for 40 to collect 40% in the month of sale, 50% in the month following that, and then 80%. And if you add these percentages, you get 98%. So this business is expecting that 98% of the amount that is money that is owing by our debtors will be collected, and only 2% will be written off. We are expecting that out of the 100% that we sell on credit, then 2% will not be collected. It will be bad debts. So let us then start with our calculations now. Let's look at our debtors collection schedule here. We have the month, the credit sales, money to be collected in March from our debtors, April and May. So let's start with January credit sales. January credit sales amount to 204,750. And if you look at our collections, on average, we are collecting within 3 months. Month of sale, the month following that, and then the month following that. So we have these 3 percentages. So if you look at the credit sales for January, which is 204,750, so we are planning to sell on credit for 204,750. So the first collection will be in January, according to that, because we are saying that the first collection is in the month of sale. So the first collection will be in January, the second collection will be in February, and the third collection will be in March. So this is the third collection. So which then tells us that in April and May, we are not expecting to get anything from people who bought on credit from us in January. So if we want to verify this 16,380, we can check. Let's take our calculators. The credit sales for January was 204,750. Credit sales, we sold goods to the value of 204. We are planning to sell for 204,750. And then the first collection will be in January, according to that, because the first collection is in the month of sale. So the first collection will be in January, the second collection will be in February, and the third collection will be in March. So the third collection is what percentage? The third collection is 8%. So let us prove 204,750 multiplied by 8%. Multiply by 8% and see what is it that we are getting. 16,308. So this is the 16,308 that has already been calculated for you, and we are not expecting to get anything from the people who bought in January for in April and May, because they would have finished paying, because it will be January, February and March. And now let us proceed to the credit sales for February and look at our collection. The credit sales for February is 250,000, and the first collection is going to be in February, according to how we collect from the debtors. So it is going to be February, March and April. That's 3 collections: February, March and April. So it means we are not going to receive anything in the month of May from the people who bought from us in February, because the first collection is in the month of sale. So if we are counting 3 collections, if we sold to these people in February on credit, so if the first collection is in the month of sale, it will be February, March and April. So which then tells us that in May we will not be receiving anything from these people. They would have finished paying us. So proceeding to March, the credit sales for March, we are planning to have 364,000 credit sales, and then the first collection will be in March. So the first collection, because the first collection, this is very important to note the first collection. The first collection is in the month of sale. So if we sold these goods to them in March for 364,000, the first collection will be in March, the second one will be in April, and then there will also be the third one in May, which we need to calculate. And then what is the percentage of the third collection? It is 8%. So let us then calculate 364,000. 364,000, which is our credit sales for March, multiplied by, this is the first collection in March, the second collection in April, so we want the third collection, which is 8%, multiplied by 8 over 100, 8%. So that is 29,120. So the third collection will be 29,120. 29,120. And we are done with March because we have the 3 collections. We sold goods in March. The first collection is in March, the second collection is in April, and the third collection is in May. And then coming to April credit sales, we are planning to have 409,500 credit sales for April. So is there anything that we are going to receive from the people who bought on credit from us in April during the month of March? The answer is nothing. We are not going to receive anything from these people because they had not yet purchased from us. They purchased in April. So the first collection will be in April. So the first collection will be in April, which has already been entered in our answer sheets for us, which is 153,972. So it means now we need to calculate the second collection, because if they bought goods in April, it will be April, May and June. But remember, our budget period ends in May, so we just have to calculate only May because April has already been calculated for us. So it will be 409,500. 409,500. The first collection is April and the second collection is May, and the percentage for the second collection is 50%, multiplied by 50%. That is 204,750. 204,750. The second collection will be 204,750. Let's just verify this. 409,500 multiplied by 50%. You can just divide it by 2. 50% is just divided by 2. That's 204,750. We are still going to receive something from the people who bought from us in April during the month of June. But we are not going to calculate June because we are only budgeting for March, April, and May. Now coming to May, the credit sales for May, the amount has not been given, so we need to calculate the amount for the credit sales for May. So, but what is it that we are having here? We are having the total sales for May. The total sales for May is 770,000. That's the total sales given in information A. And we were told at the beginning of the transactions that credit sales is 65% of the total sales. So it is 770,000 multiplied by 65%. 770,000 multiplied by 65%. Let's check. The total sales for May is 770,000. Then it will be 770,000 multiplied by 65%. That is 500,000, 500,000. So the credit sales is 500,500. 500,500. Credit sales is 500,500. Right. Now we have the credit sales for May. The next question is there anything we are going to receive in March from the people who bought from us on credit in May? The answer is no. Right? April, the answer again is no, because these people bought from us in May. So they were not owing us anything in March and April. So they only bought from us in May, and their first payment, the first collection, will also be in May. And because here our collection, we have 40% in the month of sale. So the first collection will be in May, which is 40% in the month of sale. Let's calculate that. So we have 500,500 multiplied by 40%. 500,500 multiplied by 40%, that's 200,200. But remember, these people are entitled to a 6% discount. So therefore, the calculation will be 500,500 multiplied by the first collection is 40%, and then the discount is 6%. So which then tells us we are not going to get 100% of this amount. So if the discount is 6%, it means we will get only 94% of this amount. 94%. So it's 500,500 multiplied by 40% multiplied by 96%. Multiplied by 94%. 94 over 100. So the amount is 188,188. 188,188. So you have 188,000 here, 188. The first collection, please note the calculation of the first collection. The first collection is subject to 6% discount. It's 40%, so that will be 500,500 multiplied by 40%. But that 40% again is subject to 6% discount. And if we are discounting it by 6%, it means we are not going to get 100% of that amount. We are only going to get only 94%. That is why it is multiplied by 40% multiplied by 94%. And then the amount is 188,188. So now we need to calculate the total, because the instruction here was to complete the debtors collection schedule for March to May. So we need to calculate the totals here. The total. Let's start with May. Our total for May will be 29,120 plus 204,750 plus 188,188,000. That's 422,058. 422,058. That's the total that we are expecting to receive from our customers in May. Let's calculate the total for April. The total for April is 20,020 plus 182,000 plus 153,972. 153,972 equals to 355,992. And the total for March? Total for March is 16,380 plus 125,125 plus 136,864 equals to 278,369. 278,369. So these three amounts now have to be transferred to our budget. So we are expecting to receive in the month of March, we are expecting to collect from our debtors 278,369, and from April it's 355,992, and May is 422,058. So this is the debtors collection schedule. It's like this thing, if you can make a practical example of it, is that when one can lend you like 100 rand, if you can borrow 100 rands from someone, it will be difficult to budget for that 100 rand if you do not know how are you going to collect it back from that particular person. But if that person can then tell you that I will be giving you on Monday 50 rand of that amount, and then on Tuesday 20 rand of that amount, and then on Wednesday 30 rand, then you can be able to budget, because you know that on Monday you are expecting 50 rand, on Tuesday you are expecting 20 rand, and then on Thursday. So this is what we are doing. We are selling on credit to our customers, but we do have a pattern of how our customers pay us. 40% of our customers, they pay us in the month of sale. So we can then be able to budget. We know that 40% pay us in the month of sale, 50% pay us in the month following that, and 8% of our customers pays us in the month following that. So that is why it was easy for us to budget. If our credit sales for January is 204,750, and we know that on average we collect, we have 3 collections, then we will know that for a person, those people who will buy in January, we will collect from them in January. We will be collecting from them. We will collect from them 40% in January. We will be collecting 50% from them in March, and then in February, and then we'll be collecting 8% from them in March. Then April and May, there will be no collection because 3 months would have been expired. So it's January, February, and March. For those people who are going to buy from us on credit in February, the 3 collections will start from February, March, and April, and there is nothing we are going to collect from them in May. Same thing applies in the following month. So this is the debtors collection schedule. So then these 3 totals will then be transferred to our cash budget, because now we know the total amount that we are expecting from our debtors. So that was question 3.1, where we were required to do the debtors collection schedule. And then now let us proceed to 3.2, question 3.2. Question 3.2. 3.2 is based on the cash budgets now. 3.2 is based on the cash budget now. We need to calculate certain amounts which are missing in our cash budget. It says here, calculate the missing amounts indicated by A to D in the cash budget, and that is for 14 marks. And when you turn over to page 11, the cash budget is there, it is given. And the missing amount in information A, that needs to be calculated. Information A, that is April. Information A. The missing amount, which is alphabet A, is cash sales for April. So we are required to calculate cash sales for April. Cash sales for April. Cash sales for April. We are required to calculate cash sales for April. So it's very easy for us to calculate that, because we are given the total sales. The total sales, we are planning to sell for the total. We are planning to have the total sales amounting to 630,000 in April. We are planning to have 630,000 total sales in April. 630,000. And we know that when we are selling, the total sales is 100%, but credit sales are expected to be 65%. If credit sales are expected to be 65%, then automatically cash sales will be 35%. So if we want to calculate the cash sales given the total sales, it will then be 630,000 multiplied by 35%. 630,000 multiplied by 35%. 630,000 multiplied by 35%. 630,000 multiplied by 35%. Where are we getting the 35%? We are getting it from that transaction which says credit sales are expected to be 65. If credit sales are expected to be 65, then it means cash will be 35, because credit sales and cash sales combined, they should give you 100%. So 630,000 multiplied by 35%. So the cash sales will be 220,500. 630,000 multiplied by 35%, then it gives you the cash sales of 220,500. Right, we want to continue calculating the missing amounts. We are calculating the missing amounts. The second alphabet in the missing amounts is B. We want to calculate B. Right? We want to calculate B. And then if you look at B in your question paper, your B is the loan from Janet Blom. Loan from Janet Bloom that we need to calculate. Loan from Janet Bloom For which month? We are going to be taking an additional loan in April. Loan from Janet Bloom in April. We are planning to take an additional loan in April, but the amount of the loan that we are planning to take is not given. We are required to calculate it. The only thing that we are having here is the interest on loan. We are having the interest on loan for March, which is 1,365, and April it is 2,625. And if you turn the page onto page 10, there is information about loan from Janet Bloom. Let's just read it. That is information D. Janet Bloom has provided a loan to the business at an interest rate of 9%. So Janet Bloom is giving us a loan at an interest rate of 9%. Interest is not capitalized, and 1/3 of the loan is repaid to her on the 31st of December each year. As the company was still experiencing cash flow problems owing to the coronavirus lockdown in 2020, Janet agreed to increase her loan to the business on the 1st of April 2021. So we'll be taking a new loan on the 1st of April 2021, but the amount of the loan is not given. That is what we are required to calculate. How much are we going to be taking in the form of a loan from Janet Bloom on the 1st of April? The only thing that is here which will lead us to be able to calculate the loan amount is the interest. If you look at the interest for March, it was 1,365, and in April it went up to 2,625 because of a new loan. So let's calculate the increase in interest. The increase in interest. Interest for April is now 2,625. 2,625 minus the interest for March is 1,365. 1,365. So let's get the increase. How much is the increase? Because that increase, it goes hand in hand with the increase in the loan. So it's 2,625, 2,625, 2,625 minus 1,365. 2,625 minus 1,365. So the increase is 1,260. So the increase in the interest per month is 1,260. And we know that the interest on loan is 9% per annum. The interest on loan is 9% per annum. So we need to multiply this by 12 so that we are able to reverse 9% per annum, which is going to be 100 over 9 equals to. So it will be 1,260. 1,260 interest per month, and we want to convert it to be our interest per annum. 1,260 multiplied by 12, so per annum it is 15,120, and we are reversing 9%, because remember this is the interest at 9%, so we want to reverse 9% so that we go back to the loan amount. So 9% is 9 over 100, so when you are reversing it will be 100 over 9. So multiply by 100 over 9. This is giving us 168,000. So the loan amount, the new loan amount that will be taken in April is 168,000. And if you want to prove this, you can take this 168,000, you multiply by 9%, which is the interest, multiplied by by 1 month, which is 1 over 12. If you say 168,000 multiplied by 9 over 100, which is 9%, multiplied by 1 over 12, this is giving you 1,260. This is giving you 1,260 interest. So what we were doing here is to reverse from the interest to the loan amount. So we now know, because our instruction was to calculate how much are we going to be taken in the form of a loan from Janet Bloom in April. And the only key that was given to us was the interest per month. The interest is 1,260. So if we are reversing that, we started by taking this interest and we converted it to the amount per annum, because you can't be able to reverse the interest because the interest is per annum and this amount is per month. So you need to start by converting this amount to be per annum. So that's 1,260 times 12, and then you reverse, it's 168,000. And here we are proving that exactly the loan that we're going to be taking is 168,000, because 168,000 multiplied by 9% interest multiplied by 1 month, which is 1/12, is giving us 1,260. So 168,000 is the final answer. That is the loan that we are going to be taking from Janet Bloom in the month of April. So we are continuing, we are calculating the missing amounts. The missing amounts, the following one is C, alphabet C. And what is it that is required in alphabet C? We are required to calculate the salaries of sales assistants for April. Salaries of sales assistants. Salaries of sales assistant. Salaries of sales assistants for April. Salaries of sales assistants for April. And the amount is not given. The only amount that is given here is the salaries of sales assistants for March. But the April amount is not given. And we are told that we need to go and see information E. And the information E is on page 10, where there is a story about the sales assistant. So let's go to our question papers and check the story of the sales assistant. We are told that the sales assistants all earn the same monthly salary. So they are all earning the same monthly salary. That's number one. And these sales assistants were promised a 5% increase in salaries with effect from April. So in April, they are going to be getting an increase in their salaries of 5%. And the business employed 2 sales assistants in March. So in March, we have 2 sales assistants and planned to employ an additional assistant from 1 April 2021. So the business is planning to employ an additional. So it means in March, they were only 2. Because we need to use March figures to be able to calculate the salaries of sales assistant for April. Because it is only March figures that are provided. We are told that their salaries for March was 22,400. The salaries of the sales assistants, it was 22,400. And the transaction told us that the business employed 2 sales assistants in March. They were only 2. So let's just divide this by 2 so that we are able to see how much is paid to each sales assistant. So 22,400 divided by 2. So each sales assistant is paid 11,200. Each sales assistant in March was paid 11,200. Remember the transaction that says there, they were promised a 5% increase in salaries with effect from April 2021. They were promised a 5% increase. So this amount without increase, we assume that is 100%. So if these people are promised a 5% increase, so we multiply this by 105, 105%. So by so doing, we are adding 5%. So let's see how much are they going to be earning now if they are giving a 5% increase. 11,200 multiplied by 105 over 100. It's 11,760. Each sales assistant will now be getting 11,760. They were earning 11,200 and they were promised a 5% increase. So therefore now from the 1st of April, each sales assistant will be getting 11,760. And remember that we said there is a transaction which says the business plans to employ an additional assistant from the 1st of April. We are planning to employ, so we had 2. If we are employing an additional one, so it would mean we will end up having 3. So now we have 11,760, which is their new salary after the increment, multiplied by 3 sales assistants. 11,760, that's 11,760 multiplied by 3. 11,760 multiplied by 3. 11,760 multiplied by 3 equals to 35,280. 35,200. This is what is going to be paid. The salaries of the sales assistants for April will be 35,280. Each sales assistant was earning 11,200 in March, and they were only 2. With the 5% increase, their salaries will be going up to 11,760, and with an additional one, so it means the sales assistant will now be 3. So 11,760 multiplied by 3 equals to 35,280. And now Roman figure C has been solved. We now know how much is going to be paid to our sales assistants in April. And then Roman figure D, alphabet, this is D. We are now in D, alphabet D. The missing amount in alphabet D is rent expense for March. And we are told to see information F with how much are we going to be paying for rent. How much will be paid for rent in March? The only amount that is given is rent for April. And rent for April is 39,960. Rent for April is 39,960. And we want to reverse back to March. With how much was rent for March? How much was the rent for March? Right, if rent for April is 39,960, let's then refer to information F to know the changes. Information F, we are told that is bullet 2. That's information F. The director secured premises in a local shopping mall from Propco Ltd with enough space to cater for the expected number of customers. Rent is charged per square meter according to the floor area. The rent increased by 11% per annum commencing on 1 April. So rent increased by 11% commencing on 1 April. So this rent increased by 11%. And remember, when we are increasing, we always say that the standalone amount here is 100%. So if this amount was increased by 11%, it means to get here, whatever, there was an amount that was multiplied by 111 over 100 to get to this amount. So if we want to reverse to the original amount before increase, we need to just swap 111 over 100. So it will then be multiplied by 100 over 111. Because this rent was increased by 11%. Was increased by 11%. So that it will be 39,960 multiplied by 100 divided by 111. So the rent for March was 36,000. It was 36,000 before increase. You may even prove this. If you say 36,000 multiplied by 111, you are increasing it by 11%, because any amount is 100%. If you are increasing it by 11%, it will then be 111 over 100. 36,000 multiplied by 111 over 100 will give you 39,960. So in March it was 36,000 and it was increased to 39,960. And we are given rent after increase. We just have to reverse. And when you are reversing, you just have to swap this. It's 111 over 100. Because we are reversing, it will be 100 over 111. And then we are able to get to the correct amount of 36,000. Right. So alphabet D has now been resolved, which then brings us to the end of question 3.2, wherein we were required to calculate the missing amounts indicated by A to D. So we have calculated the missing amount in the cash budget A. We were required to calculate the cash sales for April B, loan from Janet C, salaries of the sales assistant, and D, it was rent for March, rent expense for March. Right, so we are now proceeding to 3.3. Proceeding to 3.3. With 3.3, it says, 3.3 says, refer to information G and H. Refer to information G and H. Advertising. Explain the decisions that the directors took regarding the budget and actual expenditure for advertising in May 2021. Code figures or calculations for 4 marks. We need to refer to information. We want to explain the decision that the directors took regarding the budgeted and actual expenditure for advertising in May 2021. Right. If you go to information G and H, advertising budget for April was 39,000. The advertising budget for April was 12,000. And the budget for May is 30,000. So that is the decision number 1. Advertising budget increased from 12,000 to 30,000. Advertising budget increased from 12,000 to 30,000. This is the decision. So it means the directors noticed that no, they need to advertise more. So they decided to increase the advertising budget from 12,000 to 30,000. That's the first point about advertising. And what we are noting in information H there, that's page 11, is that even though it was increased from 12,000 to 30,000, but the actual amount that was spent on advertising was 42,000. Actual amount spent on advertising is 12,000 more than the budget. The actual amount spent on advertising is 12,000 more than the budget. So you can see that there are two things which happened here. The directors decided to increase the advertising budget from 12,000 to 30,000. That's an increase of 18,000. But after May, when they go back to check now, comparing the budgeted amount with the actual amount that they have spent on advertising, the budget amount was 30,000 because they increased budget from 12,000 to 30,000. The budget amount was 30,000, but the actual amount spent on advertising there, according to information H, is 42,000. So the actual amount spent on advertising is 12,000 more than the budget. The budget was 30,000 and the actual amount spent is 42,000. So even though they had increased the budget, but they still went more. They still decided to spend more than the budget by 12,000 again. So that was the decision that was taken by the directors. And then the following question, which is a follow-up to this one, is that the directors ask you now for a report on the effect that the advertising decision have actually had on customers and sales in May 2021. Provide 2 points that you will include in your report, code figures or calculations. Explain how the Provide 2 points that you would include in your report, code figures or calculations. So now we want to know the effect now of spending this much on advertising. What was the effect? The first effect that we see here, when you look at information H, the first line, the first effect that we see, which is a positive one, is that the number of customers, the budgeted number of customers was 110, but the actual amount is 135. So customers increased by 25 customers. The business, there was an increase of customers by 25. There was an increase of customers by 25. The number of customers expected was 110, but the actual amount was 135. So there was an increase of customers by 25. That's the first effect that we are noting with regards to the effects that advertising had on customers. And the second one, the sales, but sales dropped. Even though the customers increased, sales dropped from 770,000 expected to 690,000 actual. So we are noting that the business has spent a lot on advertising, and then the effect of that spending is that the number of customers have increased by 25. And the second effect that we are also noting is not as positive as we were expecting, because our sales dropped from 770,000 expected to 690,000 actual. And then the following question to that is, explain how the decline in the national economy has affected the average amount that the customer spent in May 2021. The average amount that the customer spent in May 2021. If you look at the budget, the total sales is 770,000. 770,000 out of 110 customers. So the average amount that is spent by each customer here is 770,000. 770,000 divided by 110. So the average amount, this is the total sales, which is 770,000 divided by 110 customers. So the average amount that is spent by each customer is around 7,000. But now, with the decline in the national economy, we are noting that our sales went down to 690,000, and the number of customers is 135. So 690,000 divided by 135. 690,000 divided by 135. That's 5,111. 5,111. Even though the number of customers increased from 110 to 135, but the average amount spent by each customer has dropped. The average amount spent was 7,000 here, and with the decline in the national economy now, the average amount spent by each customer is 5,111. Right. Let's then go to 3.4. 3.4, refer to information F Oh, consumable stores. They were still on 3.3. There is consumable stores there. Comment on whether consumable stores have been well controlled or not. Quote figures or calculations. Comment on whether consumable stores. Let's go to our consumable stores. Our consumable stores. The budget for consumable stores is 4,200. And the actual amount we spend on consumable stores is 5,520. So our consumable stores are now over the budget. They are over the budget. Our consumable stores are over the budget. But the question is that we need to comment on whether consumable stores have been well controlled or not. So these consumable stores, these are the items that our workers are using when they are repairing the customer's dresses. Remember, this business is selling expensive ladies' dresses, and they also repair. And when they are repairing, they use these consumable stores. So they had budgeted 4,200, but the actual amount is over the budget, which is 5,520. But what we are noting is that even the fee income for the repairs, they had budgeted 15,000 and the actual amount is 21,000. So therefore we cannot say that this was wasting. We cannot say that consumable stores was not well controlled, because like, let's say if you are repairing trousers and you had budgeted that you will use one roll of coating and you will be able to repair 5 trousers with one roll of coating. So if then the demand is too high to an extent that you end up repairing 20 trousers, then you cannot therefore expect that you will still use one roll of coating. If there is a demand and you end up repairing more trousers, it means even the coating, which in this case will be your consumable, will also again increase. So we are saying that this increase in consumable stores is justifiable, because if you look at the fee income is also, we are then concluding by saying that consumable stores have been well controlled. Consumable stores have been well controlled. They are over the budget. Consumable stores are over the budget by, they are over the budget. We can even calculate what they are over the budget by how much. Our consumable stores, 5,520 minus 4,200. They are only over the budget by 1,320. They are over the budget by 1,320. While fee income, the amount we collected, while fee income is over the budget by, while fee income is over the budget by how much? Let's check. 15,000 budget and the actual is 21,000. So it's over the budget by 6,000. So we are gaining here. So we don't mind that the consumable stores were over the budget by 1,320, because we were able to gain 6,000 more in our fee income. So that is why our conclusion is that consumable stores have been well controlled. This over the budget by 1,300 is justifiable, because we can see that the fee income is over the budget by 6,000. So the business has received 6,000 more, which we were not expecting. So it means the demand for the repairs was too high. So as a result, we had to use a lot of consumable stores. So, but if you look at the difference, 1,320 that we wasted, but from that 1,320 we were able to get 6,000 more. So the business has gained there. Right, 3.4, which is the last question under question 3. It's with regards to rental and customers. We are told to refer to information F and H. Rental and customers, the owners of the property Propco Ltd informed the directors of Blossom Ltd of the increase in rent planned with effect from 1 April 2021. In order to economize on rent, the directors asked the owners, Proper Ltd, for a reduction of the area rented from the 1st of May 2021. Proper Ltd agreed to this request. Calculate the reduction of the area rented in square meters. So we want to know the reduction now in the area rented. So if you look at the rent budget for May, if you look at the rent expense, it's 39,960. 39,960, that's 3.4. 39,960. This is our budget for the rent for May. And we are renting 120 square meters. So we want to know how much does each square meter cost. 39,960. 39,960 divided by 120 square meters. So each square meter cost 333. So if now we look at the amount paid, the actual amount that we paid for rent, it is now, the actual amount is 31,968. When we had budgeted 31,968. And if you divide this by this amount, which is 333 per square meter, 31,968. If we divide it by 333, we are getting now 96 square meters. 96 square meters. So the question is asking us to calculate the reduction in square meters. We were renting 120 square meters. Now we have paid for 96 square meters. So the reduction will then be 120 minus 96, which equals to 24. So the reduction is 24 square meters. So which is our final answer. We had budgeted 39,960 when we are renting 120 square meters. So each square meter is 333. So if then we look at the amount that we paid, which is 31,968, and divide it by the amount of each square meter, we can be able to know how many square meters we paid for. So we paid for 96 square meters. So from 120 square meters to 96 square meters, we can see that the reduction in square meters is 96. So that was 3.4, which was the last question under question 3, which is budgeting. So let us pause here for now in question 3, and then just take a water break and come back to question 4 for stock valuation. Okay. Right, welcome back from the short break after finishing question 3. So now we are proceeding with question 4 from the very same paper, which is November 2020 in bracket 2. We are now doing the last question of paper 2, which is question 4, which is based on stock valuation. Stock valuation. I hope you still remember that we have about 3 stock valuation methods. There is weighted average method, there is a FIFO method, and there is also specific identification. And we also have 2 stock control systems. The 2 stock control system is the perpetual system and the periodic system. And the main differences between the 2 systems is that the perpetual stock system, cost of sale is calculated at the point of sale, but in the periodic stock system, cost of sales is calculated after a certain period of time. And these 2 stock control systems have got their advantages and disadvantages. So, but our main focus for now is on question 4, which is based on the stock valuation. And 4.1 It says give one word for each of the following statements. Write only the word next to the question numbers 4.1.1 to 4.1.4 in the answer book. This is stock valuation. Right. 4.1.1, 4.1.2, 4.1.3, 4.1.4. Right, the first one, it says, the method is most suitable for inexpensive goods purchased regularly. Which method is that one? The answer to that, it is the weighted average. Weighted average is more appropriate for the business that is selling inexpensive goods. So weighted average method is the most appropriate for the business which is selling inexpensive goods and which are purchased regularly. 4.1.2, the closing stock balance is recorded at the most recent price paid. That is first in, first out. Closing stock balance is recorded at the most recent prices paid. We are looking at FIFO. FIFO, which is first in, first out. 4.1.3, the individual stock items are valued at the cost price on the purchase invoice. Individual stock items, we are looking at, we are targeting individual stock items. That is specific identification. So the answer to this one is specific identification. Specific identification. Right? The cost of sales is recorded for every sales transaction. Cost of sales is recorded for every sales transaction. We are looking at the perpetual system. Perpetual system. And this is 4 marks. So you should be able to know. Please make sure that you go through this and you are very much clear about differences of these stock valuation methods and also the stock control system. So that was 4.1, wherein the method suitable for inexpensive goods is the weighted average. The closing stock balance is recorded in the most recent prices, that is first in, first out. Individual stock items are valued at cost price on the purchase invoice, that is specific identification, and the cost of sale is recorded for every sales transaction. You're looking at the perpetual stock system. And now it's 4.2. 4.2. 4.2, Lotus accessories. Lotus accessories. Lotus accessories. Right. The owner is Alex Lotus. The business uses the first in, first out method to value gas lamps. They decided to sell gas stoves as well, expecting a demand due to increased load shedding. The specific identification method is used to value this stoves. The financial year end is 30 April each year. 4.2.1, calculates the following for the gas lamps on 30 April 2021. Value of the closing stock using FIFO. 4.2.1. 4.2.1, value of the closing stock. Value of the closing stock. That's for gas lamps using FIFO. For gas lamps, we want to calculate the value of the closing stock for gas lamps. If you look at page 13, information A, You have the stock balance on 30 April 2021, which is 270. The stock balance, we are having 270 in the closing stock. 270 gas lamps in the closing stock. Because we are selling according to the FIFO method, when you are calculating the value of the closing stock, you need to start from the bottom up. Because when you are selling according to the FIFO, is first in, first out. So therefore, the older stock is sold first. So whatever that may be left will be left towards the end there. So we will start the last stock that we bought was in March. The last stock that we bought, which should all be there. And the total number of units in March stock was 220, and we returned 40. So 220 minus 40 equals to 180. So we are left with 180 here, and the unit cost is, for March, is 80 Rand. So we have 180 multiplied by 80 rands equals to. And then we need to go a little bit up because we want to make a total of 270 in the closing stock. We want to go a little bit up to January. We are going a little bit up to January. And how many we should take there? There is 1,100, but we need to make up 270. We already have 180. So it means we need to take only 90 here. 90. And the unit cost? And the unit cost for January is 75 Rand. Unit cost is 75 Rand. Right. Let's have the total now, the value of the closing stock. 180 multiplied by 80. That's 14,400. 14,400. And then 90 multiplied by 75. 90 multiplied by 75 equals to 6,750. And then this is 14,400 plus 6,750. That's 21,150. 0, 5, 10, 11, 21,000. So the value of the closing stock is 21,150 according to the FIFO method. The total number of units in the closing stock is 270, and when we are calculating the value of the closing stock using FIFO method, you need to start from the bottom up. So the latest stock that we purchased was in March, which was 220, and we made returns of 80 or 40, so we are left with 180. Because there is a total of 270, we need to go a little bit up and take 90. So 180 plus 90 is giving us 270. And we are using the original cost prices of stock because this business is using FIFO method. So therefore the value of the closing stock is 21,150. That is B. We are still on 4.2.1 B now. Stock holding period in days using the closing stock. I want to calculate the stock holding period. The closing stock is 270, and the total sales for the whole year is 2,180. 2,180. The closing stock is 270, and the total sales is 2,180. We want to calculate how long will it take us to sell the 270. We are comparing it with our total sales for the year. So it will then be 270 over 2,180 multiplied by the number of days in a year. That's 365. So how long will it take, the stock holding period in days using the closing stock? So it will be 270 divided by 2,180 multiplied by 365. It will take us 45,2 days. There's 45 days. 45,2 days. So it will take us 45,2 days to sell the 270 gas lamps which are in the closing stock. Right, 4.2.2. 4.2.2. 4.2.2. Alex suspects that the stock of gas lamps are not well controlled. He suspects that the stock of gas lamps are not well controlled. Calculate the number of gas lamps missing. He suspects that the stock of gas lamps are not well controlled. Calculate the number of gas lamps missing. So it means we need to calculate everything that we are having. We were having 2,940 available for sale. The total. This 2,940 is made up of 230 opening stock plus 2,750 purchases minus 40 returns. So available for sale, we had gas lamps available for sale, which is 2,914 units. And we were able to sell 2,180. 2,140 minus 2,180. 2,940 minus 2,180. So we should be able to know how many we are left with. It is 2,940 minus 2,180 minus 2,940 minus 2,180. 2,940 minus 2,180. Available for sale was 2,940 and we sold 2,180. 2,940 minus 2,180. So we are supposed to be left with 760 equals to 760. We are supposed to be left with 760 gas lamps because we had 2,940 available for sale and we sold 2,180. We are supposed to be left with 760, but according to the closing stock, we are only left with 270. Minus 270, we are only left with 270, which is then telling us that there is an equals to, there is 490 gas lamps missing. $490 gas lamps missing. So this question saying that Alex suspects that the stock of gas lamps are not well, calculate the number of gas lamps missing. It's 490 that has gone missing. People are stealing the gas lamps. An investigation revealed that Alex's brother employed at the store, that is 4.2.3. 4.2.3. Investigation revealed that Alex's brother employed at the store orders gas lamps using the business ordering system and then sells them privately to his friends. What should Alex say to his brother when dealing with him with this matter? Provide 2 points. Alex's brother is employed at the store and orders gas lamps using the business ordering system and sells them privately to his friends. What should Alex say to his brother when dealing with this matter? Provide 2 points. This one is a clear stealing. So this is unethical. This is unethical. This is theft. And should stop doing it. This is what Mr. told to the brother. This is unethical, it's theft, and he should stop doing it. And point 2, reimburse Alex the amount stolen. He should pay this money back. We are saying that he should reimburse Alex the amount stolen. This is unethical. So this is what Alex needs to tell his brother, that what you're doing is unethical, it is theft, and he should stop doing it. And if he has to continue working with his brother, then the brother needs to know that they need to pay this. He needs to pay this money back. So this must reimburse. There are so many ways we can use. We can even recover this money from his salary. Right. We are now proceeding to 4.2.4 now. 4.2.4. 4.2.4. 4.2.4. Calculate the closing stock value for gas stoves. It is now gas stoves, no longer gas lamps now. We are now dealing with gas stoves. Right? We want to calculate the value of the closing stock for gas stoves on 3rd April, and we are now using specific identification method. It is now specific identification method. Specific identification method. We want to use now the specific identification. Calculate the closing stock value for gas stove using the specific identification method. Right. Let's go to the gas stoves. The information of the gas stoves is on page 13, and it is information B. Stock records for gas stoves, purchases and sales. We have two models there for gas stove. We have a P-Light model. And if you look at the P-Light, the purchases is 80 plus 80 plus 120. We have 80 plus 80 plus 120. 80 plus 80 plus 120 minus 132 sold. Minus 132 equals to. We want to calculate this. Minus 132. 80 plus 80 plus 120. These are the purchases. Minus 132 sold. 80 plus 80 plus 120 minus 132 sold. That's 148. Equals to 148 P-Lights. And the unit cost for P-Lights. Sisele nama P-Light 148. Satenga 80, we bought 80 plus 80 plus 120. And we sold 132. So we are now left with 148. Then the unit cost for P-Light is 495. 148 multiplied by 495 equals to 148 multiplied by 495 equals to 73,260. It's P-Light. And then the second model of gas stoves we are having is B-Smart. It's smart. It's the smart model. And let's check. The smart, we had 100, purchase 100 plus 60. 100 plus 60, that's 100 plus 60, that's 160. The smart is 100 plus 60 minus 54 sold. Minus 54 equals to 1 160 minus 54, that's 106, equals to 106. And the unit cost for smart, 100 plus 60, 160 minus 54 sold, and the unit cost is 700 for smart. 106 multiplied by 700 equals to 106 multiplied by 700 equals to 74,200. So the value now of the closing stock will be this 73,260 plus this 74,200. 74,200 plus 73,260. The value of the closing stock is 147,460. The specific identification method is the easiest method of valuing stock because you are specific to each product. You just go straight to information. You start with the bill light. You purchase 80, another 80, and another 120, and you sold 132. So you are left with 148. And how much does each cost? It cost 495. So you are left with 148 at 495 each. So the value of the closing stock for 148 is 73,260. For the smart model, you purchase 100 plus 60, you sold 54, you are left with 106. And each smart model calls 700. So it's 106 multiplied by 700 equals to 74,200. So if you are adding the two amounts, you are getting 147,460, which is the value of the closing stock using the specific identification method. Right. 4.2.5. 4.2.5. 4.2.5. Calculate, Alex thinks he should stop selling gas stoves as they are causing a liquidity problem and the profit is low. Provide figures to support his opinion. Yeah, if you look at the closing stock, it's too high. Closing stock is too high. That's the first point. Closing stock value is too high at 147,460. This is an indication that the gas stoves are not selling fast. So closing stock is too high. So there is an indication that the gas stoves are not selling fast. Provide figures to support it. Alex thinks he should stop selling gas stoves as they are causing a liquidity problem and the profit is low. Yes, the value of the closing stock is 147,460. And if you look at the markup percentage achieved, for P-Lite is 60% and for Smart is 40%. And Smart is 40%. That's the markup achieved. So you can see that there's a little bit of a struggle with regards to the gas stoves. So he wants to stop selling the gas stove because you can see that they are not moving fast. Even if you see at the closing stock, if you look at the closing stock of 148 stoves that have not been sold, it's quite a lot. And even here, it's 106 that has not been sold. It's quite a lot. So that is why we are worried about the closing stock value being too high. So that is why that he thinks that he wants to stop selling gas stove. But we are also required to explain 2 points to convince him not to discontinue trading in gas stoves. 2 points to convince him not to discontinue trading in gas stoves. Maybe those 2 points will be gas stoves will be in demand due to load shedding. Gas stoves will be in demand due to load shedding. Gas stove will be in demand due to load shedding. We are now trying by all means to convince him, because this person now wants to stop selling gas stove. We are coming up with points that no, he should not give up on the gas stoves, because there is a high possibility that these gas stoves will be in demand in future due to load shedding. And we even know that gas is cheaper than electricity nowadays. Gas is cheaper than electricity. Previously, electricity used to be cheaper than gas, but with these all price increases in electricity, now gas has become cheaper than electricity. So we can convince him not to stop selling gas stove. Maybe he needs to reduce the selling price so that these gas stoves may be sold, or maybe he needs to consider advertising this more, because maybe some people are not aware that he is selling gas stoves. But as for discontinuing selling gas stove, we are saying it will not be a good idea, because when looking at this load shedding that we are experiencing currently, it is giving us an indication that the gas stoves will be in demand in the future. And gas is also even cheaper than electricity. This brings us to an end of our question 4. Question 4 was a little bit of a short question from 4.1 to 4.2.5. And this is not only bringing us to an end of question 4 only, it is then bringing us to an end of paper 2. Paper 2. Accounting students need to be very clear of the items or aspects which are tested in paper 2, and also aspects which are stated in paper 1. Paper 1 is mainly limited liability companies, and we started by dealing with paper 1 of this exam, which was in November 2020 in bracket 2, and we finished paper 1. So it was basically limited liability companies, wherein we were looking at the income statements, we are looking at the audit report, we are looking at the balance sheet, analysis and interpretation of financial statements, cash flow statement, and all those things, corporate governance. So that was paper 1. So what we are finishing now is paper 2. And if you quickly go back to this question, you will notice that question 1 was based on VAT and Creditors Reconciliation, which is part of our paper 2. VAT is very important for us to calculate. You should be able to calculate the amount excluding VAT and the amount including VAT, and you should be able to know how to calculate VAT when given the amount including or when given the amount excluding. There was also in question 1, which was Creditors Reconciliation. Creditors Reconciliation is about ensuring that the balance that we are having according to our creditors ledger is the same as the balance that the statement as the suppliers will send us the statement. So we want to ensure that the balance according to our records is the same as the balance that is in the statement, that is reflected in the statement that has been received from the suppliers. So should there be any differences, of which in most cases there will be differences, so therefore reconciliation needs to take place so that we are able to correct that. So our question 2 in this paper was based on cost accounting, which is manufacturing. And we did emphasize that when we go to a manufacturing industry, you would expect that you have 3 departments, which is the administration department, the factory department, and the selling and distribution. And in most cases here in this one, we were tested on the production cost statement, and the production cost statement is basically in the factory department. So it's very important that when you are dealing with the transactions of the production cost statement, you are able to make sure that whatever expense that you include in your factory overheads is an expense that relates to the factory. If it is something else, then it should not be included in the production cost statement. There was also some calculations in 2.2 based on the break-even point. So a break-even point, you know, we are looking at the number of units that the business needs to produce in order to cover all its costs, the number of units that the business needs to produce and sell in order to cover all its costs. Break-even point is the point at which neither profit nor loss is made. And in most cases, when you have calculated break-even point, you need to compare it to the number of units produced. If the number of units produced is more than your break-even point, it will indicate that the business has made a profit. Our question 3 on this paper 2 that we have been doing was based on budgeting that we are doing today, and it is very important to be able to calculate the debtors collection schedule amounts. It is also very important to be able to compare the budgeted figures with the actual figures so that we are able to make the correct decisions informed by the actual figures compared to budgeted figures. And the last question was based on stock valuation. 3 methods of valuing stock, which is FIFO, weighted average, and specific identification. But unfortunately on this question, weighted average was not covered. It was only specific identification and FIFO method. So, but we want to believe that students will benefit a lot when they are doing this, when they are watching this video and also doing this question. We also encourage that people should be having the question papers when watching these videos so that they are able to follow. If you are having your question paper with you and also your calculator, so that whenever we are doing transactions on the board and doing calculations, you are able to see where is this coming from. So this brings us to an end of our accounting paper 2, November 2022. Thank you very much.